Hey guys, Pedram here with a great way to pay off your mortgage faster and create some capital for wealth for yourself. You might have heard of something called a tax-deductible mortgage or the Smith maneuver. This concept is being advertised more recently, although it's been around for quite a while. As we all know, a good chunk of our monthly mortgage payment goes towards interest. On a mortgage that's $500,000 at 5%, when you make your first payment of $2,900, only $900 goes towards equity and $2,000 towards interest. That's money down the drain unless you can use that interest to your benefit. How is this done? The revenue agency does allow us to deduct interest expense as long as the borrowed money is used for an investment such as starting a business, buying stocks, mutual funds, etc. So the first step is to go to your bank and get a secured line of credit against your home. What will happen here is that every time you make a mortgage payment and that $900 goes towards your equity, your line of credit will increase by $900, and in turn you're going to invest that money. The interest on that $900 is now tax deductible. Doesn't sound like much, but over the life of a 25-year mortgage, it works out to an average of $15,000 a year in interest that we're paying with our example here. If your income tax rate is 40%, that means you're going to pay about $7,000 less in taxes each year on average. Now I know your total debt is always going to be at $500,000 because as you're paying off your mortgage, you're creating that same amount of debt. But what you're doing here is you're turning the bad debt, which is your mortgage, into a good debt, which is tax deductible. So every payment you make, you're doing that and you're increasing your tax benefits. So at the end of the 25 years, what you're going to end up with is going to be a line of credit for $500,000, a capital investment of $500,000 plus interest earned on your investment minus interest paid, plus you've gotten a higher tax return year after year. Another way to look at it is after the 25 years, you can take your $500,000 that you have, pay off your line of credit of $500, so your house is fully paid for, and what you have now is the interest you've earned, plus you've reaped the tax benefits year after year. And without the tax deductible mortgage, what you would be left with at the end of 25 years would simply be your mortgage paid off. And to give you a short history on this, this method has been tried in the Supreme Court of Canada and is completely legal, although highly underused. Again, this is a great way to create more capital for yourself and pay off your mortgage faster. So talk to your bank or broker and see if you qualify for this. There's a lot to gain by having this program set up for yourself and nothing to lose.